Welcome, ladies and gentlemen. This is BetterTrades coach Robert Roy, and this video is being brought to you by RobertRoyTrader.com. This is our week in review update, folks. So let's go ahead. I got a lot of good things I want to talk about here. Let's go ahead and jump right into our disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, indicator, setup, something, anything that you like here today, my suggestion is you paper trade it first before ever putting one penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now keep something in mind. Because I am not an advisor, that means I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. All right. So guys, what I want to do is I want to start off with the S&P 500. We've had a lot of things happen in the last week or two, and I just want to go ahead and hit some of the highlights of it. First off, we take this big picture view of the S&P 500, and you can see this tremendous move to the upside. Right down here from about 1,100 right up to about 2,100 where we are now. So it's been a great move, and it's been a steady move, a very predictable move overall. I'm going to zoom in on this, and excuse me, as we look, you can see there are two uptrend lines in here. Now if I go back and look at the bigger picture, the top line is really the one that focused more so on the majority of the market. The lower line was some of the outliers that took place. So that upper line, it's all red right now, thin upper line, was, now there's one of the outliers, but that's a great point that we have pivoted off of over and over. And if we did break through, we were going down to that downtrend line next, that second line. Well, we had 1, 2, 3 hits before finally breaking above the high, at least the closing high. As for an all-time high, on this date was our all-time high, and our highest high was 21.1959. On Friday, we had 21.2092, so the all-time high was hit now on Friday, this last day of the week, just hit. We've got a couple of different things in there. I have a Fibonacci time ratio drawn on here, which is something that we went over in the market insights that I teach, and we went into the reasons behind it, which for our purposes here, you need to just understand that we need the breakout to take place between these 2 points. And it did. It broke out between these two black lines, broke to the upside. It didn't matter where it broke. It just had a break between those two lines. Broke to the upside. So we're looking at a potential of another $60 move to the upside from the breakout. Right? So I would have to move that line over to where we broke. So right about there. That takes us up to, let's see, that top is about 21.89, we'll call it. Well, 21.87.5, I have a Fibot line drawn in there. So there's a lot of confluence around that line. It doesn't mean we're getting there today. It doesn't mean we're getting there ever. But that's the target that we're having for our next push to the upside, is to make it up to that level. All right, so right now, the downside target is going to be this 21.10 Fibot, and not long below that, or far below that, I have that 21.0470, the 8-period moving average, and then 2100. We also have this downtrend line that can act as a support, particularly because I have the confluence of the 8 right there. For the upside, our shorter side targets, we're looking at 4105 as our first upside target, and then 2145. And then 2173 is our next target. So I just went over some of these in our Market Insights video that I did for our students this week. Just finished it up. I wanted to get this one out while it was still fresh in my head for you guys, so you can get a look at it and see exactly what we're looking at here. So let's go and look next at the VIX. So on the VIX, the VIXX, or VIX here, in extreme charts, we have a support at that $12.60 level. We broke. Very nice. We're looking for the next move to the downside, about 11.5. Now, guys, we don't have, and let me just zoom that there. Okay. We don't have a lot of distance down below that 1150, right? We've got 1040 and that 1150 line right there. So remember, the VIX, excuse me, is a contrarian indicator. So when the market is up, the VIX is down. When the market is down, the VIX is up. The VIX is a fear factor, I call it. It is the increasing fear in the market. It's a gauge, a measurement of it in there. So right now, fear is down. People are happy. They're excited. I am looking at two different things overall. This shorter term downtrend line that we've pushed under. Now, sooner or later, we're going to have to break it. It's just getting so low in price, we're not going to have a choice. I'm not overly concerned with that. My bigger view is what's going on with this line here. That's going to be the bigger concern when we stretched out to that 45 in 2011. Now, this is not our all-time highs, by the way. Our all-time highs are back here in 2007-8 at that. It was actually October of 08. At near that 90. It was 89 and change we stretched up to there. So it's not as if we have huge fear in the market right now, but the angle of attack has changed dramatically. We have this bigger picture view here of these tops, and then the steepness of this angle. We have to break it. It's of no choice. We do have a moderately, it's not much more of an angle than the big view here coming off of all of these tops. That red line in here, which can play some importance as well. That's this diagonal line in here. So we've got three different views. We're looking at the VIX. We're looking at the very big picture, more of an intermediate, and in a very short-term picture with what we have right drawn here. Now, I wanted to highlight one stock that we did this week, Priceline. We had one trade go off on Priceline, and because of the earnings, we had this identified as a candidate that we were only going to day trade. Because of the closeness of the earnings, the volatility of the options, the cost of the positions at this time for the options, we decided, you know what, we're just going to day trade this one. So what did we do? And this yellow bar was the last date I had done an update where I gave targets, price targets of where we were going. And the upper price target was 21.13. Now that was when the stock closed on the day with the yellow bar at 11.94 and a quarter. We'll call it 11.94. We had 12.13 was our upside target that we were looking for. So what happened? The next day we gapped up and we started to pull back. And we pulled back right to the key area, which was the 8-period exponential moving average. We took the trade off of there. And I went into all the numbers details in the market insights today, guys, because we were up substantially on this trade, over $18,000 on Friday on this Priceline trade. And we closed out right at that 12.13 level and took about $18,500 in profit in our non-funded trade, of course, but we took $18,500 in that trade as just one of the trades we did in that update. Altogether, we were up about 23 grand, I think it was in there. Let me see what we had. Between $22,000 and $23,000, 22 and change was our total, 18.5 being this one alone. So we kick tail every once in a while. These are not everyday trades, but by following this system and following the rules, you're going to be trying to get on base over and over again, and every once in a while, you're going to screw up and hit a home run. This was a home run trade. Right? So with that, ladies and gentlemen, we're done. Have a wonderful day. God bless. And if you'd like more information, folks, follow the link at the bottom of this video. Come and check us out. Have a great day, and I'll see you all soon. Take care now.